We're seeing increased compliance work from HMRC across the R&D spectrum. Well, there's a widely acknowledged problems with error and fraud in R&D claims. HMRC has come in for criticism for letting these problems get out of hand. For the last 2 years, its annual report has come with caveats about the scale of error and fraud. It's now estimated that 4.9% of the total cost of the release is incorrect. So naturally, HMRC is taking action to try to tackle this problem by ramping up its compliance activity. Well, we know HMRC has hired at least 100 more inspectors to look specifically at R&D claims, and we suspect that there are more personnel involved from other areas. About a year ago, they even brought in their specialist fraud investigation service to address one very specific pattern of irregular claims. The result is there's a lot more scrutiny being applied to all claims than has been the case for the past couple of years. In a nutshell, yes, it does. More inspectors means HMRC has more capacity to deal with inquiry caseload, which means that more claims are going to be looked at, more claims will be inquired into. In addition, part of the plan to tackle abuse is what's known as a mandatory random inquiry programme. That's moving away slightly from the historic risk-based approach to inquiries and means that some claims are going to be looked at on a purely random selection basis. There's no specific topic that's the focus, but we have been able to identify some trends from what we've seen. For example, we're seeing HMRC increasingly asking for more technical detail around the eligibility of each R&D project in the claim. In other words, documenting why something qualifies as research and development. Sometimes that's asking for more details than are given in a typical technical report. Sometimes they're asking for supporting documentation around the project. And sometimes they're asking for a broader sample of the activities to be described. We've also seen HMRC asking specific questions about the eligibility of certain costs, particularly externally provided workers, and they're wanting to see better connections between the activities that are being undertaken and the costs incurred in doing that form a part of the claim. Well, first of all, they will correct it. That might mean that a company will need to repay tax or a credit that's been paid, and we need to remember HMRC can open an inquiry even after they've already paid out a payable tax credit. They will also likely charge interest on the money that is now owed to them. HMRC also has the power to raise a penalty if it believes that the error has been made carelessly or deliberately. It is more likely to do that. Well, if your claims are robust and prepared in line with the legislation, there's nothing much to worry about, other than the potential that you might need to incur additional time and effort in preparing and defending your claims. I would recommend, though, that companies should look carefully at whether their claims are robust. Do they fully understand the legislation and the guidelines that underpin the claim? Are they confident that the claim is correct and will stand up under scrutiny should HMRC open an inquiry and ask awkward questions?